Good evening, everyone. Welcome back to the channel. So it's been a couple days, but we're going to continue the series here on if you had $1 million invested in a given dividend ETF. And today's we're going to talk about SCHD. Now, me personally, this isn't one of my favorite ones, but this is one of the most popular ones that trends on YouTube. So let's discuss it. So to start off, I'm going to share the same spreadsheet I've been using for the last 3 or 4 that I've done, which is going to be here. And this is what we've got. So the fund currently is trading at about $75.57. So with $1 million, you would get about 13,233 shares. And the dividend on this one is paid quarterly. Now, my takeaway on this, the dividend is nowhere near what it is for the other ones that we discuss, unless there's something I'm missing, which is always a possibility. So we come up to quarterly dividend payouts, which add up to about $256 per year. So on $1 million, you would only be making like 33,902. So it's about a fourth of what the other ones have been for the payouts. Per month, this would be about $2,825 a month. So big drop off. Now, the good thing with this one, the dividend is increasing. So we're averaging about 21 cents per month if you divide this number by 12, which is 2,778.93 per month, or 33,347 per year. Now, if we keep increasing, and we're actually trending up towards 25 cents a month, we could be at 3,308.25 a month, which would be closer to 40,000. Our current annual dividend payout right now is 3.39%, which on $1 million would be about 33,876, with a little bit of rounding close to that percentage there. Now let's look at Yahoo Finance to look over some more details on this fund. So I'm going to stop this screen and I'm going to start another one. So we will go to, let's see, we will go to share screen, and then this one. Okay, so now we're going to look at Yahoo Finance. Because really, I can't figure out why this one is so popular online compared to the other ones. I mean, I see this talked about all the time. You see the dividend's only 3.32% on $75. So there's other funds that could be had a lot cheaper that pay a better dividend. Now, the expense ratio is very low. So for some of you, that might be a draw. Now, and the other thing, this has been around for like 10 years, since back to 2011. So it's actually, and I think this is the reason why this is so popular, because it's actually appreciated in value pretty decently over that time. So if we look at from the start of the pandemic until now, we've actually gone up from $44 a share all the way up to as high as 80, and then dropped back down in September, and we've come back up. So we've actually seen in the last 5 years, we've seen some pretty decent price appreciation in this one. Now, as far as historical data, the only things that I found for dividend yields is what I put into the spreadsheet that I showed, but I didn't see any other, like say stock splits. There wouldn't be any of that because it's an ETF. Sometimes ETFs and mutual funds pay out a capital gain distribution. I don't see that for this one. And let's see, I think all ETFs are optionable. So I believe this one is as well. Yeah, you see the options chain here. Like I say, I would talk more about options, but I don't get that many of you to watch option videos. So I stick to the dividend ETFs. Now, the next ones we'll talk about are probably in this peer group here, this VYM, this DGRO, and some of the other ones that I've been asked about in the comment section. But as far as the SCHD, that's what we would be looking at in terms of the dividend yield. Now, for most people, you could still survive on that. I mean, it wouldn't be as easy as making 120,000 a year on another one, but I mean, it's still doable. But like we've shown in the others here, let me go back to my spreadsheet really quick. So let's see, back to the spreadsheet, which I just leave open now. It's a little bit quicker than pulling it up on the same tab. Okay, so if we look here, the other ones I've gone over in this series, we've talked about JEPI, which would pay out 115,000, in the base scenario, SVOL, which would pay out 175,000. See, I would rather have that even if the fund stays flat, because I am a true dividend investor. I would rather just have those payouts, with $1 million, because that I could do whatever else, and all of you following, you could do whatever else you want in life, but you get that as your base payment, and that's really phenomenal. QYLD would do the same thing, 129,000 per year. And then the others, TLTW, would pay you 199,000, almost 200,000 a year. The EPI, which we showed, and yeah, now on to this one, SCHD. Now, the good thing, your $1 million that you put into it, this is probably the silver lining here. Your $1 million that you put into SCHD, you could have bought this, say, 5 years ago, or just say even that you bought it before the pandemic. So if we go before the pandemic here, or say you bought it like mid 2020, we're up 35% since then. So say you bought at like, I'll say $50 a share. 50, which is going to be, why did it not populate? Oh, this divided by 50. That's going to be a nice even number. 20,000 shares. And then say now they're trading at, we say 75.57 a share. So you would have made 511,000 on your $1 million. So this one, and this might be why so many people like this one so much, because while the dividend is not as good as the other ones, you would have increased your money by 50% since the pandemic. So in those almost 3 years now, which is hard to believe, in almost 3 years, you would have gone up $511,400. So that is 170,000 per year, basically. So what you didn't make in dividends, you would have made up in the price appreciation of the fund. Let's see how we're doing here. No live viewers. Okay, what I'm going to do now, I'm going to look up some other nuggets of information on the SCHD site. I'm going to go to there's a good site about ETF information. Let's see, SCHD. Let's see what we got here. Oh, I'll go directly to the Schwab site. So let me change screens again. We're going to stop the screen share here, and we're going to go to this screen over here. So that's going to be over here. Here we go. So I'm going to pull up Schwab Asset Management, and we'll look at the description of the fund. So expense ratio, very cheap here, 0.6%. The fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Interesting. Now the Dow, as we know, is not completely correlated to the market. The Dow Jones 100 Dividend Index is actually trading at 5,328. So this is a different entity altogether, I guess. The Dow Jones U.S. Dividend 100 Index is designed to measure the performance of high dividend yielding stocks in the U.S. with a record of consistently paying dividends, selected for fundamental strength relative to their peers based on financial ratios. Okay, so that's the rationale of that fund. I just looked that up on another tab. Highlights of this fund: a straightforward low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio, tracks an index focused on the quality and sustainability of dividends, invest in stocks selected for fundamental strength relative to their peers based on financial ratios. Here's some details that most of you probably don't care about, like volume of shares, net assets, shares outstanding, net asset value, portfolio turnover, SEC yield, weighted average market capitalization, price to earnings, price to cash flow. And then we've got, let's see, performance, Yeah, see, in the last 3 years, uh, really accelerating. You can see the bar chart here. Market price compared to net asset value, compared to Dow Jones Dividend 100 Index, compared to large value. You can see all of these results here. And oh, 2 live viewers. Hopefully those of you watching live enjoy this commentary on this SCHD fund. Feel free to leave a comment. Of course, since you just joined, oh, and one of you left. Well, for the one of you that's still here, feel free to leave comments. And you probably missed most of what I discussed on the spreadsheet, but just feel free to look, watch the video again, play it back, and then you'll see what I discussed early on with the spreadsheet analysis. It wouldn't make as much per year like I've discussed with the other ones, but with the price appreciation, you would have still made 511,000 over the last 3 years, because it's almost been 3 years since the start of our favorite pandemic, which is crazy thinking about that. I mean, that was a fast 3 years. But anyway, I will leave some time for comments here, and I'll keep on hammering some of these points here on this Schwab asset management site. After-tax returns. Now, there's probably some tax efficiency to be had on these, but I typically don't like to talk about that because that puts people to sleep, and we don't want to do that. Cumulative growth of a $10,000 investment as of January 31st, 23. Now, this is a lot of you are really going to like this, since 2013, because again, the fund has been around for like 10 years. So since 2013, we would have made like 30,000 in this fund, I guess in the best case scenario, and then in the worst case scenario, 25,000. So that's between a 2.5x and a 3x on our money, which is very good. So you see here, compared to Dow Jones, a Dividend 100 Index, compared to large value, and then the worst 3 months versus the best 3 months. Looks really good. So some of you may prefer the actual price appreciation in the fund instead of the dividend itself. For me personally, if I was going to follow this strategy, I'd probably want that fat dividend, but I can see the appeal to this one too. So with all of that being said, hopefully you all enjoyed that. Please remember to like, comment, and subscribe, even if you didn't, because there's something here on this channel for everyone. Thanks so much for tuning in. I'll try to get back to daily videos, hoping for the best on that. But thank you all for those of you that tuned in live, and take care. Have a good rest of your weekend.